Welcome back to Trading 360. I'm Nicole Penelides, live in New York City. It is time now for the Big Three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Mike Shorr, Director of Trading Education at Prosper Trading Academy. Glad to see you both. Mike, I know you're talking about one hot stock today, and that is Yeti. At least we know that the products were well in demand, particularly the coolers, during the pandemic. It's been a beautiful chart. It's just off the highs. This one's on your radar. Why?
For having me. Just chugging along, and then earnings came out. Earnings were actually really, really good. Market does not like uncertainty, though. And so there was a couple things about supply chain that everybody's worried about. And so we saw that move down yesterday. And so I'm looking to scoop it up here.
Okay. So, Ben, take a look at the chart. As I said, it's really been a beauty. Just recently hit that high of 108. What are you watching as you're charting this, Ben?
Well, I'd agree with you on a bigger picture. It has been impressive in many ways. We're looking at the daily time frame there, but in terms of some of those supply chain constraints that Mike just mentioned, I think, well, we can see some of that concerns that investors are expressing as of recent. Let's move away from the daily, the year worth of, and let's go into some intraday candles here, because you can see the 5-minute time frame, some of the selling you mentioned just off the highs, Nicole, and here you can see the last, well, few days from 110 back down to this 94, 95 level. What really stands out to me is, well, the gap lower after earnings, and recently how we're just kind of still holding these lower levels. No real rejection off this lower level. As we move away from that into the 60-minute time frame, though, you can see, though, that this week we're talking about a new November low, but I want to point out still holding up above the October lows. That's down around 82. Now remember that 82 level, because that's going to be key as we distance ourselves a little bit more from this granular intermediate time frame. Here's a look again at that daily, and we were looking at the last year worth of data. This goes a little bit further back, so we're talking about since the summer of 2019. I want to point out the trend environment to the upside. Look at the move off the pandemic lows, and that most recent high you mentioned, Nicole, up around 109. Limited follow through, though, as we tried to break out to the upside. So what I see here is kind of this pattern that we like to look for, where these areas of balance form at higher and higher levels, but then notice most recently we sort of lost some of that follow through. So I sort of look at this as like from a very staircase type well-defined trend environment to the upside to more of kind of like a sawtooth type pattern, where we're just kind of seeing limited follow through to the downside and to the upside, but a well-defined upper extreme. Those highs you mentioned, Nicole, and that 82 level again, as I mentioned. Lastly, look at where things stand relative to the 50-day moving average. I mean, we pulled right back down to it. So something to watch here in the coming days and weeks, that's for sure.
Yeah, Mike, I'm sure you're charting this the same way, seeing these big moves here of recent, right, of late. What's interesting is that the CEO himself said on the earnings call that the company is not immune to cost pressures, supply chain disruptions. But what I did think was interesting was this beat and raise, raising guidance on the top and bottom line going forward. So true belief in the company's potential moving forward. Mike, I know you have a trade for us on Yeti. Tell us more.
Yeah, so this is not something that I expect to hash itself out over the next few days. It might take us a little while. So I'm going a little bit further out than I normally would, but I'm going out to regular Jan, and I'm looking out at the 105-110 call spread. That lines up really nice with the implied volatility move up through Jan, buying that for $1.25. So we can make $3.75, risking that $1.25.
Right. That's interesting, right? I wonder if this could be a holiday gift, too, and get some momentum and things like that, Ben. I mean, you see this 105, 110, and that's really circling right around that high. Tell me more, Ben.
Well, I'm looking at it, and I see kind of the middle of the range that we're in. Again, as I mentioned earlier, 80 to 108, so roughly 90 to the $100 level. But again, we're holding above the 50-day moving average right now, and I think traders tend to favor the upper extreme or the upside, the long side, if we're actually above that kind of pivotal level, whether you're talking the 50 or the middle of the range that we're in, and ultimately favoring the short side on a more short-term intraday, more not necessarily granular, but 2-3 day weekly type basis But yeah, if we're talking about longer term here, there's potential to see this one up and through the 100, 105 level. Again, the concern here is just that the recent test of the 108 saw limited follow through. So we're in a bit of a range here. We could see some chop trade in this area. But yeah, holding up above the middle of it, I think, is key in terms of that somewhat bullish stance at this point.
Okay, now let's turn our attention to Datadog. This is a name that over the last year or so, every time they report, they continue to do well. The company just hit a high. It's getting closer to that 200 level. I know it hit 197 and change after the lows back in May. What a run from basically $70 to almost $200. Mike, your thoughts here?
Yeah, this is one of those ones that if you're waiting for the pullback, I'm not so sure you ever get it. And so you kind of have to play that one on a breakout type of scenario instead of just buying highs. You got to buy breaking through those highs. That's what I'm looking at there. But I haven't seen a bad piece of news about this company.
Yeah, and they continue to beat the street on the quarterly numbers. Ben, what do you think when you think about Datadog? It's like the wave of the future continues to do well. Your thoughts?
Mike sounds awfully bullish. I'm curious to see his trade on this one, but I can see why. When you look at the charts, there's been a lot of upside momentum here, a fairly well-defined trend that still seems to be in place. And Nicole, we're certainly seeing some of that high conviction in place here on the most granular. Let's take a look at the 5-minute time frame. And you can see the bid activity as of recent in reaction to earnings. And this is almost the exact different story in terms of what we were just talking about a minute ago as far as Yeti and how we just haven't really had a lot of conviction recently. Here you can see, as Mike pointed out, Datadog, not a lot of bad news circulating around this one, recently rallying up to just shy of 200, 197.69, and basically holding that upper level since. Now, you know I like to take a step back. Let's do just that. And pointing out how they're no stranger to a big run-up in reaction to earnings and then just kind of holding upper levels. So pullbacks have been very short-lived, and I think that speaks to Mike's point. There hasn't been a lot of opportunity just to sit back and kind of put in a limit order and let price come to you. You've had to be a little bit more aggressive in terms of trying to participate in this trend environment to the upside. The daily really speaks to that high conviction trade. Again, we're talking from 69. Look at this. We're talking all the way up to, as mentioned, just shy of 200. And then I just want to point out on this week, sort of speaking to the point in terms of the high conviction price activity we've seen since the pandemic lows that we saw. We've been down only 4 weeks and fractionally lower in each of those. You can see how higher this week, and it looks like we're going to be. We're talking about the 5th week in a row to the upside in a vertical phase. Again, when in vertical type phase, we see the higher highs, the higher lows. We're certainly seeing that on a weekly basis. And again, as Mike mentioned, that type of a scenario does not provide a lot of opportunity to buy on pullbacks. It forces you to be a bit more aggressive and kind of just hope that this trend continues to the upside.
There's just so many positive comments when you look up Datadog. First of all, the company enterprise software continues to raise guidance. The analysts seem to be hot on it. The IBD 50 roster of growth stocks, it ranks number 17 there. Management, strength across customer segments and products as digital transformation and cloud migration continue to drive business. So Mike, tell me a little bit more about your trade here as the company reported the third quarter earnings recently, did incredibly well, saw that pop and raised the guidance too. Seems like a lot of good news surrounding this one.
Yeah, and the nice thing about this is that if there is a pullback, you don't have to try and pick that bottom. I'm actually looking for the market to confirm what I'm already seeing and breaking out to the next level. So I'm looking at the DEES 200, 210, 215 broken wing fly, and buying that for what are we gonna buy that for? $165. So that has 2 targets in it. One would be the 210, and then 215 above that, which actually pulls back on your reward to risk a little bit, but that's a nice thing to have to deal with.
Right. Okay, Ben, your thoughts?
Well, I think we're in a situation, again, where this market has been trending to the upside. We mentioned the high conviction aspect associated with the trade. I think what you're looking for here, again, if you're long, you're looking for follow-through to continue, but you also want to see an area of consolidation form. You want to see acceptance of this new upper level. we know that sustainability in terms of these higher highs and higher lows that I mentioned earlier, at some point we're going to find a stopping price. We're going to start to see a more rotational type overlapping trade. That will provide opportunity itself. But again, in continuation of the bid that we've seen, this market is seeking value higher. The question is, will it find that upper level? Will it start to consolidate at some point and establish that upper level? At this point, a V-top type pattern. Well, it could play out here certainly, but certainly at this point, no indication of that so far. So something to watch here. High conviction to the upside, to say the least.
Right. Okay, let's turn. Oh, yeah, Mike, did you have a final thought? Go ahead.
No, I was just agreeing with it.
Okay. So how about this one? Let's see if we can agree or disagree when we take a look at Caterpillar. Because Caterpillar hit these highs in June. There's a lot of talk about the infrastructure package, reopening, we're going to get in the thick of winter, but then spring's coming. Tell me, Mike, your thoughts here on Caterpillar.
Yeah, Caterpillar I know everybody's talking about rising interest rates. We're still in a very, very low interest rate environment. And so that stuff doesn't scare me yet until it becomes a problem. It's not really a problem yet. It's a piece of news. That's great. But whatever, everything else is really, really fundamentally sound with CAT. And I don't think you have to worry about it getting too far away. I'm looking for a grinding type of move up in Caterpillar.
Okay. And Ben, your thoughts as you take a look. I mean, the high was way back in June.
Oh, I completely agree with Mike in many ways. I think he points out two key things to take note of when you're looking at the price activity and what to expect from CAT in the coming weeks. So you mentioned the low rate environment. We saw just this week, small caps and large caps for that matter, the Dow and the Russell into new all-time highs. So the broader base index, a reflection of what Mike was speaking to, how the trend environment continues to be the upside, and low rate environment, historically low rate environment, has been supportive of that. Now, to Mike's point also in terms of, there just hasn't been a lot of conviction one way or the other to CAT, so I've kind of categorized it as it's sort of just purring as it sits here right around this $200, $210 level. A bit of a grind higher as of recent, back up and through 200, but let's take a step back. Notice here, again, from that 186 level to where things stand up and through 200, well, that's just sort of right back into the range that we established over the last few months. We've come off the 224 highs, down to 186, and again, for the most part, comfortable in this zone to say the least. The daily time frame, a quick look, shows how there just hasn't been a lot of conviction one way or the other. Nicole, you mentioned the pullback off the recent highs up around 250. A nice little double bottom here around 186 to take note of, but again, we're talking middle of the range type price activity. And look at this, even on where we stand on the year. I mean, for the most part, just in the middle of the range that's been established over the last 12 months. And then last but not least, you can see the weekly. I think this sort of speaks to how we could actually start to consolidate in an area here. Remember, we were talking about these areas of consolidation after a high conviction move up. Well, if CAT starts to establish one here, we could see a bit of a grind play out here. Again, lower extreme 186, upper extreme 246, something to watch here. Well-defined trend higher, and I think infrastructure, low rate environment is supportive of this one. It's a bit of a grind here off those upper levels. Not necessarily something super convincing here yet.
Okay, so Mike, whether you're convinced or not, your final thoughts here on the trade.
Yeah, exactly why I went with the calendar on this one, the 215 call calendar. With a slow or even non-existent move, that front month is going to decay for us. If we get that grinding move that we talked about, I don't see a really compelling bearish case. So anything like sitting here, decay, and we hold up in the back of the spread, if we grind up, that's even better.
Yeah. Good to see you both. Thank you so much for the big three. Very exciting today. Mike Shorr, Prosper Trading Academy, Ben Lichtenstein, a good big three today. Yeti, Datadog, and Caterpillar. Thank you.
Thank you very much.